What's going on, guys? As promised, I told you guys I was going to release my academy for free. I've sold this since 2023 for over 300 to $400, and I was like, you know what? It's time to kind of like just give back. Whether this is going to help you, whether you are completely new or whether you already have experience, it's gonna guide you. So I'm gonna try to drop 1 to 2 videos a day on the YouTube channel, just step by step. It's gonna start from the basics, okay? Fundamentals. What are the options, Greeks? In the money, out the money, out the money. Which contract should you be choosing? And then it'll get into technical analysis, which is support and resistance, supply and demand, trend lines, and reading candlesticks, the patterns, and then it's going to get into more advanced stuff like creating game plans, what to look out for, relative strength, relative weakness. And then it's going to get into some economics, and then it is going to get into journaling, risk management, psychology. And so it's going to cover literally absolutely everything. There's so much to cover, but the first few lessons, I just have to go over the basics. So if you're completely new, the first few videos are going to be for you. If you're not completely new, honestly, there's a lot of people who think they know how to trade options. And at the end of the day, if you ask them what is delta, what is theta, they don't even know what it is. So even if you have experience and you don't know what that is, this is going to help you. You shouldn't even be trading options. What are you doing trading options if you can't explain the options Greeks like the back of your hand, right? So this first class, very fundamental. Let's get right into it. See, we had a lot to cover. So let's get right into this. So fundamentals, okay? Basically, what are ETFs? An ETF is an exchange traded fund. How I like to think of it is like a basket, right? Think of a basket of stocks, and there's so many ETFs in the market. It's like instead of investing into Apple alone, like right now, Apple is around 200 something. Let's just say it's at 220, right? And let's say I think right now it's actually at 270. So let's say it's at 270. If Apple's at 270 and you want to own a share of Apple, a piece of Apple, you have to pay 270 to own a full share of Apple. And if Apple goes from 270 to 280, how much do you make? Only $10. Unless you have multiple shares, which means you'd have to throw, if you want to have 100 shares of Apple, then you got to throw like 27K into Apple in order to own 100 shares. And you would only have access to Apple. But if you invest into an ETF, it is an exchange traded fund, which is a basket. For example, the S&P 500 is one of the largest ETFs. And if you invest into the S&P 500, then you have access to multiple stocks in that basket instead of Apple alone. And SPY actually holds, as you can see, the top 500 companies in the stock market, in the US stock market. Some of the top five holdings being like Apple, Microsoft, Google, Nvidia, Amazon, et cetera, et cetera. QQQ holds a lot of the same names. It would just be a little bit more tech based, like Nvidia, AMD, Apple, Microsoft, right? But they both hold a lot of the same name. And so you can invest into an ETF and have access to a much larger amount of companies instead of just Apple alone. And so, if you guys have ever seen a heat map, this is a website that I use a lot. It's called finviz.com. Finviz.com, you could see, has pretty much sectors of the companies, right? So you can see this is the technology sector, this is the financial sector, consumer defensive, healthcare, and there's an ETF for pretty much every basket you could think of, every like sector you could think of. There's ETFs for software, there's ETFs for real estate, energy. And so instead of investing into one stock alone, for example, let's go over financials, right? In the financial sector, if you want to invest into JP Morgan Chase, that's great. You could invest into the company Chase alone, but you would only have access to that stock. Or you could invest into the ETF, which kind of has the average of all of the bank stocks like Citigroup, Morgan Stanley, Bank of America, Wells Fargo. And there's certain things that could affect that sector. For example, interest rates, CPI, that could affect that overall sector. One thing to know when you're looking at finviz.com, the larger the box in that sector, the bigger the holding that stock has. And so, therefore, for example, JP Morgan's a much bigger box. Berkshire Hathaway is a much bigger box than PayPal, American Express. right? So therefore, when JP Morgan makes a big move one day, it can kind of carry the whole sector. For example, in the technology sector, look how big that box is on Nvidia, on Apple, and Microsoft, right? Those are some of the three biggest boxes compared to Adobe, Texas Instruments. Like, if Microsoft makes a big move one day, guess what? It'll carry that whole sector with it. So there's some stocks that will have a bigger effect on the overall sector compared to other names, right? And so it's very important to know that. For example, consumer defensive, which is like food stocks like Walmart, Target, Coca-Cola, Procter and Gamble, Pepsi. Look how Walmart is a much bigger box compared to Dollar General, compared to um right? Targets, Costco and Walmart are bigger holdings in that sector. So therefore, when those stocks are doing good, it can kind of carry that whole ETF. And so usually when you look at some of the other ETFs, you guys could take notes on these, right? The XLE will hold a lot of energy stocks like ExxonMobil, Chevron. XLI will hold a lot of names in the industrial sector like CAT, LMT, Boeing. XOY, consumer cyclical sector, right? It's very similar to SPY. A lot of the names that are in XOY are in SPY, so I'd rather personally just invest into SPY myself. Consumer staples is more defensive, like I said, the Walmart. Whenever, even if we're in a recession, guess what stocks still, perform a lot better than some of the others. They'll still take a hit, not as big as a hit though as technology, because when the stock market takes an overall hit during recession, technology stocks fall the most. But when we're in a bull run, technology stocks rise the most. But it's good to have a good overall balance. And whenever things are falling, it's a good hedge to your portfolio, like Walmart, Costco. Because whatever happens to the economy, humans still need food. What else do human needs? What else do humans always need? Healthcare. So regardless of what's happening in the economy, CVS, right? John and Johnson, LOY. For example, if we look at the heat map again and we look at the healthcare sector, right? Where is it at? It should be somewhere around here. I think I always change it. Healthcare, LOI. Yeah, now it's over here. But healthcare, LOI is a much bigger box, right? UNH is a much bigger box. Pfizer, J&J. So those are going to be some stocks that can hold up that overall sector. And so just a quick introduction on ETFs. This is going to be the ETF lesson, very basic. In the next lesson, we're going to talk about in the money, out the money, at the money. And then the lesson following after that, pretty much we're going to get into the options Greek. So thank you guys for watching the first lesson. For the first few lessons, I'm going to be talking over a lot of the recordings. That way you guys don't just watch recordings. It's going to be like kind of like active. And then for some of the other ones, I'll just post the actual videos that I talked through. But leave a like and I'll see you guys in the next Academy video. Peace.